what's going on with what's happened in the year and what we can look forward to in 2021. We're also trying a unique platform today that will allow us to have a great networking experience. So please, all of you that are signed up, please join us and stay on for that. It will be a really good chance to network with our peers and a great chance to actually connect with people. So really excited about that. I'd like to also thank very much our sponsor of this event, GTH, that actually joined us on the stage. Thank you so much to GTH. Without you would not be possible. So thank you so much for that. We'll be hearing more about GTH just before we begin our networking session and during our networking session. So I'm really excited about that. So I'm going to hand over to Nikki. I'd like to introduce Nikki as well from Contentworks. We're co-hosting the event today, so really excited about that too. This is the third Forex breakfast that we've run, and this seems to be growing and our following seems to be growing, so thank you so much for that. We're really hoping to enjoy a nice face-to-face event in a nice location, hopefully Cyprus in 2021. So thanks for that, Nikki.
Hi, thanks, Lily. Hi, everybody. Welcome. So excited about today's event. It's like, as Lily was saying, our third one, and we're really hoping that one of these days we really are going to have a proper Forex breakfast, and when we do, it's going to be big. So it's been a very charged year. We're looking forward to hearing what our analysts have to say, what the predictions are going to be for next year. Welcome, Jamil. Thanks for coming back to moderate this big Forex breakfast. We had a nice chat last time, so I'm looking forward to hearing what you have to say this time. And thank you, all of you, for attending today. I see more and more people are joining as we speak. For those of you that want to participate in the discussion on social, our hashtag is Big Forex Breakfast. So do use that if you want to be part of the online discussion. And just before I finish, just because it's that time of year, we are going to be giving a free financial calendar template to all of you from Contentworks. It's something that you can download, and it's a template that you can use. It's got all the important economic events, all the hashtags, relevant hashtags, and all those kind of special social media days. I'll pop that link in the chat, which is just on the bottom on your right on your screen. As soon as I finish talking, which is about now. Thanks, Lily.
So, Nikki, I just was plugging in that. Yes, sorry. So I'd like to also introduce you to Marta. Marta's responsible for the content of this event. Marta, please, if you can share some words with us as well.
Yes, sure. Thank you so much from my side also for joining us today. And I hope it will be a great, very Christmassy debate on the Forex latest market trends and the future. If you have any technical issues, our colleague Panayotis is there. He's logged as Qube, so you can send him the private message, or you can just type on chat, and he will be there to support you. And I wish you have a great time with us today, and also lots of love and peace for this holiday season. Have fun.
Wonderful. Thank you so much. And we'd now like to hand over to Jamil. Jamil, hi. Thanks so much for moderating today's session. Jamil's from NAGO. I'll allow him to say a little bit more about himself and to introduce the panelists. Thanks, Jamil.
Thank you very much. I would like to also offer a special thanks to Qube and Contentworks for having us all and all of the work to host this event. I have this exciting job today to be moderating this exciting panel with an excellent bunch of contributors from all over the world on investment trends and markets and what we could expect 2021 as a recap as what happened in 2020. I'd like to just briefly introduce our panelists. We have Stephen, the Chief Global Market Strategist at Axie. Thank you very much for being with us today. We have Naeem, the Chief Market Analyst at Avatrade. Thank you, Naeem, for being with us as well. Millie, the Head of Brokerage at FX. Good morning, Millie, and thanks for being with us. And Ricardo, the Senior Analyst at Active Trades. Now, today we're going to be covering three different subjects. We have one, what 2020 has been for markets, biggest learnings from investments point of view and assets that have been impacted. We're also going to discuss what we could look out for in 2021. Fingers crossed we're going to be behind this pandemic by then. And we're also going to look at where asset prices could be trading, where they could be valued 1 year from now. So I just love to start with subject one. This is a question for all of you. From an investment's point of view, what has been your biggest surprise and learnings from the markets? And I'd love to talk and start with Stephen, if you don't mind. Hi, Stephen.
Hi, Jamil. Honestly, I just think it's the reinforcement of "Don't fight the Fed," and that seems to be the mantra that's carried through most of 2020. And we constantly have to remind ourselves that fact that the Fed really has done a wonderful job here in providing liquidity through the world, not only through credit lines but also through in the U.S. markets, monetizing all sorts of debt, and it's really allowed risk markets to flourish. Greater than anyone had ever imagined. So that's really the biggest learning I've learned. And I'll tell you right now, if we find ourselves in a situation like this ever again, I'm just going to listen to what the Feds do, regardless of what all the analysts are saying out there.
Thank you very much, Stephen. So that's the metaphor for today. Do not fight the corporation and the machine. Thank you for that. Naeem, what about you? What have you learned in 2020 in the market's point of view?
Thank you. Look, for us, the most important thing is that this pandemic has put forward 10 years in terms of technological innovations, in terms of human behavior adopting to new environment. And that is quite an intriguing one, because something that we've experienced during this particular year is the work from home environment has obviously ticked up massively. And that is going to have enormous impact on the real estate sector next year. So even though there is this particular element out there that look, the Federal Reserve and the fiscal policies from various different governments have supported the sentiment for the right reason, for sure, but this can take a massive hit once again, especially with the mutation of the virus that we are currently facing in the UK, and then there is evidence of that in the other places of the world as well. So for us, I think that, okay, look, obviously central banks have been massively up on the ESG front, and secondly, how this technological curve has shifted 10 years forward. I think that is a massive focus for us.
Thank you, Naeem. I don't think us sitting in the UK have had any luck at all recently. It doesn't look like it's changing following the recent news. Anyway, good morning, Millie. What about you? What have you learned in 2020? What have been the biggest learnings from the investments point of view? You're just on mute.
Yes, can you hear me now?
Yes.
Great. Okay, it helps to be unmuted. So I was about to say that I completely echo Steve's comments. It's been remarkable to see what's happened with the stock markets around the world, given that we are going through this economic slowdown worldwide. Unemployment rates are, at the highest levels, since the Depression, for example, in the States, and we've got the stock markets rallying. So the lesson is that when a situation that's new like this comes into effect, all economic models that we've known so far come out the window, and we just need to follow the money, what is going on with the stimulus, and I expect to see more next year. But another surprise that I had was seeing oil futures go down into the negatives. That was completely crazy, completely unexpected, and it's unbelievable. But given the way that it works with storing oil and obviously us reaching full capacity, you can completely understand it. But I did not see that one coming.
Yeah, I join you on that one. I hold my hand up, honestly. I had no idea that oil prices could go into negative territory. So that was a first for me as well. Ricardo, what about you? What did you learn from 2020?
Well, morning, guys. The most interesting aspect looking at the markets has been the desperation for yield. So many investors out there with with the current environment, very low interest rates, are just desperate for yield, and so we see higher risk assets really gaining a degree of traction in the market that wouldn't be justifiable if you look at the fundamentals. You see, all sorts of things, but the most remarkable impact of that has probably been the growing disparity between the stock markets and the underlying economies, and this happens to a large extent due to this desperation for yield. So for me, that's been probably the most important, most interesting dynamic in the markets this year.
Thank you for that, Ricardo. I think that brings us on to our next point as well, because many of us spoke about, before this event, about the disconnect between the stock market and the real economy, the shock we all had at how fast stock markets were able to rebound in 2020 following the biggest shock in many years for certain markets and indices, especially asset classes too. So my question for all of you now is, firstly, well, what caused the stock market to recover so fast? And secondly, do we think that it can continue into 2021? And I will start with you, Stephen.
I think we learned something through the year that 2020, everything happens 20 times faster. And I think this is getting back to the stimulus factor again. I think the central banks just laid it down so thick and heavy here that it opened up a panacea for risk taking. When you look at stocks and you start to price in earnings per share on a present value situation, when you're present valuing back to zero, that's quite a discounted present value. So that gives you, a huge lift for buying stocks that you might not necessarily have considered buying. But I think the big change around here was the stay-at-home narrative and how people adopted technology. And this is getting back to Naeem's part here, where he was suggesting that technology was embraced. It was embraced 20 times faster. What we thought was going to happen 5 or 10 years over the next 5 or 10 years happened in a matter of months. And this is significant. I think people have adapted to staying at home. I think technology will continue to advance. We look over here in Asia, for instance. I think we're going to have a super cycle in technology simply because of the enormous population and the drive for G5 technology. I think this is really the underlying current that we're feeling right now. And I think this is part and parcel to the rapid rise in global equities that we're seeing across the world. Is it fragile? Of course it is. But in the meantime, I think these stay-at-home narratives are going to continue even after the pandemic leaves.
Okay, so that means more Netflix, and I think it means more households will know what Zoom is. I don't think anybody would have thought that Zoom would be the household brand of 2020, but there we go. Naeem, what do you think? Stock markets to continue their upward momentum into 2021?
So let me answer the earlier question, and then that will lead us very nicely into this one. Look, I think what we've learned, and then I'm sure all of us over here, we have experienced several different market crashes. In my wealth of experience, this was the fourth one. And if I remember, if we just go back to what happened in 2009 and why the financial crisis was so bad, was because a lack of cohesive reaction and action from the Federal Reserve and in terms of fiscal policies as well. So this particular year, when the pandemic started to hit the market earlier in February, what everyone was looking for, one particular thing, and that was cohesive reaction from the monetary policy side across the globe. The moment that we heard that news, and then it started to hit the headlines from the Federal Reserve, the Bank of England, ECB, BOJ, and so forth, market changed its narrative altogether. Because as Stephen pointed out earlier, it was very much the same trade, do not fight the Fed. That's what we learned in 2007 to 2009. Don't do that. So the market players were very much clear that now the printing machines are on. Let's stay away from the Federal Reserve's path and then let this market continue. And just like 2007 and 2009, just after the 2-month recovery, rumors started to speculate into the market. Okay, this recovery is still fragile, and the market is going to go lower because we are completely out of sync with reality. Again, a narrative that we've heard back in 2008 and early 2009 when the crisis really happened. People were calling for the market to revisit the lows of March 23rd, even fall further by another 30%, which would have pushed the S&P 500 index by another 40% from its all-time high. But we didn't see that. Markets started to move higher. The narrative changed. Stock market became more strengthened because of the optimism and the work done by Donald Trump, and all credit goes to him with respect to coronavirus vaccine. Because the moment that we started to hear the news about this vaccine coming into the market, and then much sooner than the market was expecting before, the stock market continued to move higher. Now we are sitting at a stage where mutation of virus has become a concern. Of course, WHO is indicating that this is not this particular virus is not as dangerous as the original one, perhaps the same. So if the current vaccine can address the challenges and the problems of this virus, through which we can resume some sort of economic activity, then of course we can see the stock market continue to move higher. However, if there is an actual mutation of a virus, meaning the vaccine is no longer valid, which we don't have a proof yet, then you can write off pretty much the first half of 2021 to all the way to end of 2021.
There you go, guys. That was the secret there. If this virus, new variant, is as significant as we saw in the falls of global markets yesterday, we will have an interest in 2021. Millie, what do you think? Can the stock markets continue to go higher in 2021?
I think they can. We're having unprecedented levels of stimulus. I mean, just now they've approved a new round of stimulus in the States, and all this is resulting in stock prices rallying. I do, however, agree with Naeem that we're going to have to watch carefully what happens with the global vaccination rollout, as well as new strains that are mutating. So if the rollout, for example, is slower than we expect, then this might lead to a little bit more risk aversion. However, at the same time, we've had stimulus packages promised for the foreseeable future. So as long as the central banks continue to support economies by ways of stimulus, I believe that the stock markets are going to continue rallying. The question is, if they, for example, slip up and they make a comment that might sound like there's an end in sight, or if inflation reaches a certain level, for example, 2% in the States, are they going to consider increasing interest rates? Because this is then going to have an effect on global stock markets as well. So there are a few factors here at play, but as long as this new strain isn't, but even if the new strain is quite dangerous, as long as the people are assuming the stimulus is going to remain there, we are going to continue seeing strength in the global stock markets.
Well, if borders continue to get closed around the UK, it looks like it will be contained to where we are at the moment. Ricardo, what do you think? 2021, stock markets to continue to move higher?
Yes, I think so. The conditions that supported the growth in 2020 will remain in place, as the guy said earlier. So there's the promise of stimulus. It's very unlikely that central banks will change their monetary policies. A couple of the most important central banks have already made it clear that they are prepared to let inflation rise above that, 2% level, at least for a while. The Fed actually pledged to maintain interest rates very low, at least until 2024. So I think the conditions are all there. There's a couple of variables that can derail things. One of them, as the guy said, it's the way the pandemic is contained or not. So if this new strain has the potential to render the vaccine useless, for example, then that will dent risk appetite. The other cloud in the horizon for the rise of stock markets, I would say, is probably the threat of regulation over the tech sector, which was one of the main engines behind the growth of 2020. But in all honesty, I would agree with you guys and think that the conditions are there for the growth to continue, and it's more likely that it will than not.
Thank you so much, Ricardo. I'm sure I'm not the only one with my fingers crossed underneath the table, hoping that this vaccine still works against this new variant. But I really wanted to touch on something you just mentioned, Ricardo. Same with Naeem alluded to. Now, Naeem alluded to President Trump and the work he has done to push the vaccines forward and the stimulus and so on. And Ricardo, you just mentioned the technology sector and the threat of regulation. That brings me on to our next topic. Amidst everything else that's happened in 2020, we've also had a historic US election. 1 month from now, we should have elect Biden being inaugurated to become the president of the United States. So my question to all of you is whether you think a changed United States president impacts the investor landscape and in which way, and also what sectors you think will be impacted from Biden becoming the United States president. Stephen, if you don't mind kicking off.
I think the big next major risk event is going to be the Georgia runoff, Georgia Senate runoff, and I think obviously the reason for that is going to make up the majority on the Senate. Obviously, if the Republicans get in, I think Biden and Yellen are going to have a lot of problems getting any stimulus packages through, and this is going to be a bit of an issue. On the other hand, if they do manage, if the Democrats do manage to take the Senate, then there's a prospect of higher taxes. Now, will those prospects of higher taxes really come through, given that there's such a slim majority? Probably not. So I think that'll probably get deferred to the more stimulus run, and that should really bolster sentiment. I think the biggest concern we have right now is probably around energy sectors with the Biden presidency, just given the greening mandate. However, I think the runway for that evolution is quite long. I think it's going to take longer than 4 years. I don't think there's going to be any drastic switch in the energy markets to the extent that people are pricing. Sure, pretty soon, in the next 20 or 30 years, I think the electric cars are going to do to the energy sector what the Edison's light bulb did to the candle factories, but I don't think it's imminent now. So I think that's probably going to be placated to an extent. But I really think where the next focus is going to be around ESG, and this is going to be a significant impulse. We've already seen Big O change their mantra. We've already seen the market sort of reprice copper aggressively. We're starting to see it even reprice palladium, because these are going to be used in a lot of electronic products that people are going to be using. And copper is going to be wrapped around the world 2 or 3 times as people start embracing more technology. We're even looking at silver, for instance, in its use in solar energy. So there's going to be so much input going into the ESG sector that I think that's going to be the next wave that we're going to see from the Biden presidency.
Thank you so much, Stephen. So there we go. The energy sectors want to watch heading past 2021. Naeem, what industry or sector or asset class are you watching with Biden presidency on the agenda?
One particular thing that I wanted to say is clean, beautiful coal is out of the window, what Donald Trump used to say. And it is 2021 is going to be predominantly focused on ESG and renewable energy, because we have 2 people who are very much supportive of this idea. Number one, the president of the European Central Bank, Christine Lagarde, and then of course Joe Biden, who's going to roll out the policies the Obama administration pretty much put in place. If you look at the flow of ETFs, a number of new ETFs which are very much geared on renewable energy, that just opens up your mind and the vast amount of opportunity that we are going to have in 2021. Because I know, Jamil, you are based in the UK. Remember, we were supposed to have the combustion engines still running until 2040. But under the new government, Boris Johnson, he's brought it back to 2030. So that means no more combustion engines past 2030. So I think I am expecting pretty much not similar, but close enough to these policies over in the United States as well, where this particular narrative will continue to float that, okay, let's move towards zero carbon emission. Let's be more aware of ESG and then be the leader in this space. Because what Trump administration has done over the last 4 years is it has remarkably dented the US position in the global platform. Now, Biden is really going to reverse that. But remember, this is a ship which isn't really going to take a U-turn immediately. It will take time. But another factor that I will be really looking at going into 2021 is scrutinization of tech companies. And I'm talking about the major giants like Google, Facebook, and then how the GDPR data, how the use of data within these big tech giants is really going to be looked at. So yes, this year we have seen massive rally with respect to Amazon, which is up several 100%, and of course Google and Facebook. But I think going into 2021, you wanted to be a little bit wary about these particular companies, just because the power that they have over the data that they really control.
Millie, what about you? What do you expect from the Biden presidency, and what assets or industries are you watching for potential movements?
Well, I think another effect of the Biden presidency is going to be an improvement in the relations between the US and China, for example, as well as the US and the EU. And this is going to have an impact on markets around the world because it's going to result in a more stable geopolitical situation, which is going to then result in higher risk appetite. So risk assets are going to go on the rise, for example, and that's not necessarily limited to any particular industry. I also absolutely agree with what the guys have said before me. That's the disadvantage of going last or second last, but definitely we are going to see ESG become a more prominent subject, talked about more and more. I mean, already we've seen an increase, but as Steve was saying, it's been accelerated 20 times now with what we've had with the coronavirus. I think we should actually be looking at the geopolitical relationships around the world and how an improvement in those resulting from the Biden presidency is going to impact the markets.
Thank you, Millie. So I get the sense that we're expecting a bit more predictability from the Biden presidency, and we're looking at a few different themes after what has been a very unpredictable past 4 years. Ricardo, what about you? What assets or industries are you watching with Biden coming into power?
Well, I think Biden will probably adopt a more open stance towards the rest of the world, so there'll be less emphasis on protectionism. I don't think the relationship with China will improve. One of his main challenges will be managing a hostile Senate. To what degree it will be hostile, as Steve was saying, will depend on the results of the runoff election in Georgia on January the 5th. But nevertheless, it will not have a massive majority, and for main policy changes, a 60% majority is required. So we'll need to get on very well with Mitch McConnell from the Republican side. They have been friends apparently for several decades, and hopefully that will help. But I think the main challenges he'll face will be that, the way he'll be able to negotiate or not with the Republican side, considering how polarized things are at the moment in the US. There will be a closer relationship with the traditional allies, and there will be a big propensity to launch a massive stimulus program for the economy that will have a big emphasis on green energies. This is all interlinked, of course, but I think that the industries that are more exposed to the Biden presidency at the moment would be obviously tech, with downside risk there for tech, and I would say that renewables, construction would have upsides, and energy would have downside as well.
Thank you so much, everybody, for your contributions there. So in 2021, one trend that we're also seeing is a lot of commentators, a lot of media headlines talking about the perfect storm for dollar weakness. We've seen the dollar recently touch its lowest levels in close to 3 years. We've got the euro strengthening to its highest levels in just over 2.5 years. A lot of moves towards the end of last week as well. So my question for all of you now is, what is causing this perfect storm metaphor for dollar weakness? Can we really buy into it? And should we expect the dollar to further weaken into 2021? And just to shake things up a little bit, I will go anti-clockwise. So I will start with Ricardo. What do you think about the dollar's prospects and the greenback next year?
Oh, now I don't have the advantage of hearing what everybody else said earlier. Well, I think, as you said, it's been almost like a perfect cocktail of circumstances that dictated this dollar weakness. So obviously, until March this year, we had a measurable divergence in terms of monetary policies between the Fed and the other main central banks. So that was one of the reasons. The other reason as well is that as that divergence faded away, obviously the dollar lost some traction. But then this effect was exacerbated by the optimism that we saw emerging towards the second half of the year. And especially after the vaccines, after the willingness that was proven by all the main players to keep up massive stimulus programs, the pledges to stick to them, this all created the expectation that in 2021 there will be a massive economic rebound, which is likely to impact very positively, for example, emerging markets and other assets that have been a little bit underpriced due to that flight to safety that was so beneficial for the dollar. So I think it was this cocktail of a perfect storm almost of circumstances that dictated dollar weakness. And in all honesty, well, still within within following the premise that things will unfold as we expect, so the vaccine will be successful, etc. I would expect dollar weakness to continue into 2021 and to slowly but steadily to even increase.
Thank you. Millie, what is your opinion on the dollar and the perfect storm metaphor?
I agree. Actually, we've had so much dollar being printed that this year there was more than 20% of all dollars that have ever been printed have been printed this year. So it's not a surprise that we're seeing US dollar weakness. In addition, we've had unprecedented levels of stimulus, which, of course, is going to weaken any currency. Now we've turned around a little bit. There are hopes of a vaccine that's going to be effective. Okay, yes, we're having a scare now about this new strain of the virus. But if things continue going as they're going and we continue seeing this unprecedented stimulus, which is definitely what the markets are pricing in, and we continue to expect very low rates going forward for the foreseeable future, a combination of these factors is going to result in the US dollar continuing to weaken, absolutely. And another thing is, if you think about the US dollar weakness, it's always relative to something else. So for example, if we look at the US dollar relative to the euro, relatively speaking, the US economy is underperforming compared to the US. As well, if we look at the projections, for example, for economic growth from the OECD, they're expecting the US to have a more difficult time recovering. So relative to other economies, I do expect the US dollar to continue weakening.
Thank you for that. Naeem, what about you, 2021? Do we continue to sell the greenback?
Look, 2 words from my side. Guidance. This is going to impact the dollar price going forward. At the Federal Reserve's recent meeting, what has happened with respect to the growth forecast or with the GDP growth forecast? Of course, the Fed is feeling a lot more comfortable, and these numbers have started to take higher. The Fed decided to inch the dollar higher, and we've seen the evidence during the financial crisis when the Fed actually started increasing the interest rates 2 years after when they started to scale back on the asset purchase program. The moment the asset purchase program, the scaling down of the asset purchase program was announced, we started to see this massive steam coming out of gold prices, and because of the dollar was moving higher. And I'm expecting the same to happen. Again, I'm going to emphasize on this particular aspect. If there is no mutation of COVID, or if there is a mutation of a COVID, but it can be contained without any massive or mammoth damage to the economic growth, the Fed is going to become a lot more comfortable with respect to their monetary policy. And when it comes to the stimulus package or anything, how much did we get? We get only 900 billion approximately. How much were we talking about? Over 3 trillion. Why that scale has changed massively? Because of the optimism that yes, economic recovery is going to continue. So the dollar weakness, or the unprecedented weakness that we have seen because of the monetary policy expansion, in my humble opinion, is likely to change in 2021. Yes, the Fed wouldn't change the narrative when it comes to the interest rate, but it is the stance, their message delivery, which is really going to start pushing the dollar index higher.
There we go. So it looks like the new variant of the virus and what happens with the pandemic could add a spanner into the works on all of these perfect storm dollar weakness trades. Stephen, what do you think? Are you a contrarian at the table, or do you see that the dollar will still weaken as well next year?
I've made a life in foreign exchange markets being the ultimate contrarian, but I think the trading currencies is all about cheapness and richness, And I think, arguably, the U.S. dollar is completely overvalued, and that's the basis of it all right now. I mean, it's had years of U.S. dollar exceptionalism supporting it, so it's about time to turn off that pedal and probably start looking at some other currencies for a change, especially when we bring this vaccine into the narrative. Central banks, I don't think are all that important. Of course, the Fed is, but what the rest are doing is pretty much nothing because everybody's hanging around the lower bound zone, and that's just the fact of life. There's no currency interest rate advantage to trade currency, so it's really becoming more of a growth thing. So with the vaccine narrative and the length of that runway, and that catalyst is going to be huge. And even though it's a consensus right now, we haven't really priced everything in. So let's face it, the world's going to be a lot brighter place in 6 months to a year. And this will allow other currencies to flourish. Looking over at Asia, for instance, one of the things that the Feds have done, and most recently was through the average inflation targeting. And what that really does for emerging market risk, it allows emerging market central banks the ability to monetize more government debt without worrying about the Treasury bills in the U.S. yields climbing. That's significant. That's opened up the doors to a lot of emerging market currencies. But, big but, and here's what I'm really looking at going forward in 2021. I think we're on the precipice of an inflation washout or a reflationary washout. The reason for that is I think we're going to see lockdowns extended through Q1. I think the world just needs to fight this. I don't see whether it's a mutant virus, whether it's a normal virus. I just think politicians are going to feel pressured to lock things down for another couple of months, and this is just going to be a fact of life. So that's going to wash out the reflationary trade. I think we're going to see a massive bounce in Q2, and I think currencies are going to rally, but I think we're going to see that vaccine smile hit pretty quickly. So in other words, what I'm referring to is we're going to see such a pent-up acceleration of inflation, the Feds are going to just stop and come in and raise interest rates, and that's just going to put the dollar in its track. And at that point, I think the dollar will start to reverse. Now, getting back to my comment about everything happens 20 times faster, that's why I'm only using two cycles for the dollar to self-correct, because everything's going to happen super fast. Inflation's going to hit the market super fast. The Feds are going to put on the brakes super fast, and the dollar's going to reverse going into year end. So I see the euro probably trading back down to 115 by the end of 2021. Completely contrary to everybody out in the world, but that's the way life is. And I just think that's ultimately what's going to happen at the end of 2021.
We will hold you to that one as well. We'll look to see what happens. So I think Stephen also touched on emerging market FX then, and there's a lot of celebrations right now in some of the emerging markets. For example, the South African rand, one of the highest yielding emerging market currencies, jumping to its strongest levels since before the pandemic late last week. Which assets do you guys think we need to watch? Which currency could strengthen, or what other asset classes against the US dollar into 2021? Ricardo, what are you watching? Are you watching the euro or something different?
Well, I do agree that there will be there's a lot of upside for emerging markets. So you mentioned the South African rand, definitely one to watch. Things in Turkey are interesting. I mean, not so good at the moment, obviously. There's a lot of political tension, and they recently replaced the head of the central bank there and the finance minister as well. But I think Turkey could see some rebounding as well, given how much the lira has been suffering. But I would say that the pound, with Brexit done and dusted, a deal with the EU in place, there will be some scope for pound gains there. I think the euro as well. I mean, what's happened this year it's incredible, really, for the euro. In July, when the 27 agreed to some extent mutualize debt and to distribute some of that money as a subsidy through the member states that need it the most, was what many called the Hamilton moment for Europe. So this is likely to bring more cohesiveness in the Eurozone and in Europe, and I think the euro could benefit from this too.
Thank you, Ricardo. So there we go. That's the Turkish lira, a currency that most certainly is not overvalued if you look at how much it's been whacked apart over the past couple of years and dominated the headlines, and that's the euro too. Millie, what assets are you watching?
I've been keeping my eye on Bitcoin and what it's been doing as a result of everything. Everything that's going around in the world, because as we are seeing these unprecedented amounts of stimulus being printed, people are looking to preserve the value of their money, and Bitcoin has really taken the spotlight. Because an interesting thing that's happened is, if you look at actually who's been buying Bitcoin this year and what's led in the rally that we've had, it's mainly institutional demand. So I'm seeing a shift away from, you know, the little traders or the millennials towards the larger corporations that are expressing an interest. And yeah, I think Bitcoin has the potential. At the moment, it still has a relatively small market cap of around 412 billion. But JP Morgan has foreseen that the market cap could increase by another 600 billion, which I think is maybe even a modest estimate. So I've been watching Bitcoin as the asset that's going to, I think, benefit the most as a result.
And those headlines contrasting Bitcoin and gold and what could happen in the future, that's going to be something to watch into the 2020s. Naeem, do you have any comments on Bitcoin or different assets that you're watching next year?
When it comes to digital assets, such as Bitcoin, it is all about two major factors. Number one, adaptability, and number two, banking solutions. Now, we all know what happened with banking solutions when PayPal said or gave a green light to Bitcoin. That is exactly when the rally really initiated for Bitcoin, when it was trading in around $11,500. I think going into 2021, what we really wanted to see is more challenges being addressed with respect to the banking aspects of Bitcoin. And as long as we see that, as long as we see more integration with the bigger platforms, with the bigger adoption, we are very much likely to see a massive rally. Because when it comes to Bitcoin, the major headline was, the headline number was 20,000. Now, nothing is really going to excite the market unless the price touches $50,000, because that is the price target that is very much touted in the market. And once we hit the $50,000, then perhaps we will get once again something from the regulators coming and then cooling down the market. But from here onwards, the prices are very much likely to move forward. When it comes to currency market, I believe that yes, if we do get a Brexit deal, or if we don't get a Brexit deal, the path of least resistance for sterling against the dollar is still very much skewed to the upside. And we could easily see sterling going above 1.4 or perhaps 1.42 against the dollar in 2021. As for Turkish lira, earlier I believe Ricardo mentioned on that. Yes, the currency, unfortunately, it has seen its worst times this year and the last year. And as you've also pointed out, the beating is just literally happening from left and right. So we expect lira to strengthen going into next year. But again, strengthen against what currency? Because if we are talking about against the dollar, perhaps we may not see that much of a strength coming back, because we are expecting for the dollar index to rise going into 2021 just because of the forward guidance, as I've explained earlier. So overall, the opportunities in the digital assets is you wanted to focus on Bitcoin. I'm a firm believer with respect to Bitcoin's position and then how much it can really still rise. And then I think $50,000 price level it's very, very normal, and it's nothing unusual about that. I believe that in the next 3 years the price can go all the way to 100,000 as well, because it is just like how many dollars are going to buy 1 kg of gold, and then that is pretty much the same phenomenon with respect to Bitcoin now as well. And as in a monetary policy will continue, the dollar, they will continue to print more dollar. It is going to work in favor of Bitcoin because of the limited supply. But overall, my trade for 2021 is, yes, perhaps being long on sterling, being long on, of course, on Bitcoin, and Turkish lira also likely to recover as well.
Thank you for that, Naeem. I think it's heads or tails really right now whether a Brexit deal gets done or not, but let's see over the coming days. Just to conclude on this topic, Stephen, what do you think? What assets are you watching in 2021?
Well, just to put my cursory comment in Bitcoin to join the crowd here, I just don't understand how treasurers are going to possibly manage vols at 100 times when they can barely manage vols at 2 or 3 times on currency markets. This is really going to be interesting if this thing does get embraced over the next year. I'm very, very suspect it will, but anyway, I'm open. I'm very open to see how it goes. I think my views on currency markets, again, deferring back to richness and cheapness again, I think cable at 137, 140 is far too rich. I think euro at 125, 130 is also far too rich. However, on the opposite side of the coin here, I look at the yuan at 655 as being far too cheap. So what I'm looking at here is more of Asia currencies. I continue to favor the Asia play. I really like the commodity-backed plays with the Malaysian ringgit and the Indonesian rupee. I think those coalesce quite perfectly into a reflationary dynamic. So as far as the currency risk, I tend to favor those out. And the reason why I focus on Asia is I live in Asia, and I don't tend to focus more on the European currencies or the European linkers, which I think we're probably right on the views that the other panelists are giving. I just don't focus on them to make a valid comment on them. So I'd be really looking, if this reflationary trade continues to pick up steam, I'd be looking at reflationary linkers. And I think in G10, I could probably throw the Canadian dollar and probably throw the Australian dollar into those baskets also.
Thank you so much for that, Stephen, and all of our panelists for their contributions there. I can see the comments in the chats are flying about Bitcoin and what's happened in recent weeks. So I'm going to go straight into our third and final subject. We're just over 15 minutes to go before we're going to wrap up this panel. So Bitcoin and global assets projections, where are they headed in 2021? So we saw Bitcoin in the news. Not only did it hit 20K last week, it hit 21, 22, and 23K. It's dominating all the headlines still even into this week. What's driving this rally for Bitcoin? Is it really different to the rally that we saw 3 years ago? Many believe that it is the case. And can it continue into 2021? And I will go back to Stephen first, just to reverse the course. What do you think about Bitcoin 2021, Stephen?
Well, I think we've just shifted so many narratives on Bitcoin. I think we're on our third cycle of narrative, whether it was, the initial wave, it was going to be an autonomous currency that's going to be privately held, and central banks wouldn't be able to get their mitts on it. And then we've evolved from, the payment system. Now it's evolved into being accepted by Main Street. I guess some of the larger